This should look familiar to you. Both of these are little dipper patterns. So I wouldn't necessarily look for the market to make a V bottom and just go rocketing to the upside, although it can. I would put my money on the market making some sort of move like this, where you have second and possibly third chances to buy as the market professionals make these little dipper probes back down into support. So this area between 374 and 316 more than likely is going to act as support. So as the market starts to push up, I would expect probes into that area. If they hold, then the market will more than likely move back up, more than likely challenging 1500, possibly even getting all the way back up to the all-time high. It really is tough to say at this point, but the likely scenario is another challenge to about 1500 before the market does move down. I'm still overall bearish on the U.S. market. Now, I do know that the insider code is about currency trading, so let's talk about some currencies. The pound right now has made a pretty good sell-off itself. You can see here trading at 9,400. This is right in line with what we were talking about in the weekly wrap. So let's talk a little bit about some of the strategies which were available to you had you been looking out for them. If you remember, right about the 10th, I started talking about the market trading sideways, possibly breaking out to the upside. And you can see that the market did have several false breakouts to the upside. In fact, there was one long trade we got into here, got whipsawed into a long trade there, and then got into another long trade, slightly profitable over here, before the market closed on Friday, making its final push down. Had you been watching out on Sunday, there was a potential short trade over here. But let's talk about some of the counter trend trades. Now, I don't talk about the counter trend trades in the videos because there's no way that I can know what the market is going to do as it's setting up. And a counter trend trade really is something that is better suited, or is better if you can sit and watch the market for a couple of hours. Very simple technique using a 3-bar reversal. So remember, we need 2 hits on any one line in order for that line to be considered resistance. Let's go ahead and move back a little bit here. So you can see the market comes up here, makes a top, comes over here, makes a second top. You could even call this 2 and 3. So by the time the market is over here, we have a resistance line that's valid. So what do we look for? Well, we look for 3 bars to come up to the line. We have 1, 2, 3. So by this 3rd hour, we're looking for a reversal in the marketplace. Now, some of you might be saying, well, Mac, I don't want to wait over an hour, or isn't an hour a really long time to wait? Yeah, it is.